gold hitting all-time highs. We're at 26.85 according to Yahoo right now. This is 26.85. It was just showing on the gold futures for December, and that's putting gold for year-to-date 30%. I mean, I've been tracking and talking about this a lot, but all year long, all new highs coming through the late summer into August and then September here through 2600. Now, what's happening? Well, a lot of U.S. debt, a lot of government debt around the world, a lot of central banks and the way just the currency creation and things like that have worked in the money system that's been applied. A lot of Bitcoin related things you could say are taking place as far as the Bitcoiners, and what they'll talk about is central banks and fiat currency and devaluing the currency or debasing the currency with dilution by continuous printing. So are you seeing that in the gold markets now? All-time highs all year long, and looks like to me like this looks very strong. This looks like pretty good. This is on weekly candles here. A lot of strength, a lot of I don't have volume correct on this, but strength indicators looking good. This is not exactly for that, but like we're seeing Bitcoin reaching this point too, where after the halving now, it's been long enough. They've been tracking in this little range. This is I'm just gonna put that back log. They've been tracking in this near their all-time high range of 60 to 70,000, and they've got, what is the halving? I'd say it was in April, so we're still just a few months, not even a full half year since the mining reduction of how many Bitcoin get issued out every block that miners get rewarded for. So that got cut in half. That's a big event. And at the same time, you're watching gold hitting these new all-time highs, and basically the world saying that they want something more hard to create, hard to print. The reason gold stood as money is because it's very durable, meaning that it's not gonna, it wouldn't burn up in a fire, right, if you had it in your house. So it's durable, and you can take it around with you, and it holds a lot of value in a small amount of a package. Now, if you have a lot of money, you need a lot of gold. Now that becomes a different problem. Now that's why we don't use it, and paper and everything took over. But digital world, iPhone world, we're still in technology ramp up here, technological revolution, just like the Industrial Revolution. 100 years before, we're in tech and digital revolution. The iPod was like really people's first interaction with a digital type device. The moment where like physical world things were becoming less so. Like just the phone I'm holding right now, 20 years ago, how many devices does this take care of all in one? A calculator, a video camera, a photography type photo, film photo, voice recording, phone, actual phone, so many things all in one now. And the digitization and sending money and all these things that have to take place on the phones now, that's such the next evolution of what's going to happen. And I think you're seeing gold just price in that sense that there's only going to be so much Bitcoin, so you have to hold these assets that aren't going to be inflatable. And even down to stocks, they can issue more shares depending on the company. If the price goes up a lot, it's a common practice. They kind of capitalize on that increased market cap or valuation on the company, and they sell shares to people who are obviously very much hot for the company's shares right then. So they're able to inflate the amount of shares out there, diluting current shareholders. And you can't do that with Bitcoin, and it's harder to do with gold because you have to mine it. So there's a lot of work that goes into it. That's why the Bitcoin, the stance on Bitcoin is the amount of work and time going into it creates the value. And I agree with that. I think that's a fair enough way to say how something is valuable, how much energy and time was put into it, versus something that's very replicable or very low value, doesn't take a lot of time. A simple analogy like sand at the beach, not very valuable. You can go get a lot of it almost any time, and anyone can. So not a lot of energy or time required to kind of trade. If you put value on something that's low value because it's so easy to access, and versus like just just find some gold. Like, how hard is that? And then mining and oring and all these things. So things with value are pricing up right now. Now the market's going up too. We got the Fed with the interest rate and the interest rate reduction, 50 basis points reduction on the Fed rate. So that's going to help. That's, like I said, interest rates and things are always going to push asset prices up if interest rates are going to go down, because money's going to get, more liquid and ready. But what I'm liking right now, as far as the inflation side of things, you got to be in some stocks. We're following all these names here week to week. The hard assets are pricing up, though. That's what the story is here today. Gold all-time highs. So you can make an argument. What does it do? What is it for? Is it just a piece of metal? Does it have commodity use really in electronics and things? Yeah, but it's pricing up this way because it's a store of value for money and wealth, and governments or banks around the world, and people especially, they recognize that and they trust it. It's a trustless type of system, right? You don't need to really believe in a bank or a government or any type of entity or anything like that if you hold a gold bar. And Bitcoin's the same way. And those two are pretty unique. I mean, can you name another? What else? Silver, right? But what else as far as like good money that you can trade easily enough in today's world? What's going to stand in terms of like trust as governments continue to... They're just politicians behind all this spending. So like another wave comes in and elects and they have plans and nobody's really having to pay the tab when they walk out. Do you understand that? Like, it's not anyone's money when they walked in, and they're settling some things that go on, and then they're out the door, and nobody's ever got to settle up, what was owed or anything like that. So the protection for the average person around, just having your wealth stored in things that others, governments, and whatever powers it might be over time in history, they can't take away or inflate away. And that's what I think you're seeing when you see gold 30% in a single year. That's saying something about economic conditions to me. So pay attention to the markets, keep an eye on the gold, keep an eye on Bitcoin. Good time to be acquiring in this kind of period, watching the headlines, watching what BlackRock's doing. I just saw some positive stuff this week. So search around and study these things. Find out what makes sense to you and how much in your portfolio you want to start dedicating around to different strategies, because you need more than one. And stocks are great, but you got to have a little bit of a risk, like a risk play in there for like different investment, different asset allocation. And you can thankfully do this nowadays in simple like 401ks and IRAs and stuff because of the ETFs. So you can get the BlackRock ETF, IBIT, ARK Invest, ARKB, that's their ETF. There's a handful of others, and you can throw these into your portfolio, and it's just like buying a stock. It's an ETF, and it's not a stock though, so you're not necessarily exposed to like U.S. markets or economy in that same sense. At least that's the theory, but it's a theory I like. So take it as you will, and I'll talk to you later.